Hello guys, today we're going to be talking about swing trading. Okay, I've already drawn something here because I was just after a session I was talking with someone about this, so I thought of just sharing this. So I've just divided the market into four. These are simply the quarters that we have in a year. Okay, so we call them quarterly shift in the market. So the first thing first, before we talk about swing trading, we want to focus on quarterly shift. Okay, so what we are looking for here, we are looking at the lowest low and the highest high. Okay, so we get to see here that this is the beginning of the quarter. This is the first quarter, let me say. So we get to see that our price created a low and went up here, created a high. Okay, so you want to note that high of the first month. Okay, that price created. Okay, so we note that one. Let me just make it straight. Copy this and paste it here. Okay, so this is what we have. So now what we're going to be looking for, it's price to come back to this level. Okay, so but let's leave that for now. So we get to see that this is our highest high that has been formed. Price went down. This is now our second quarter. Price formed a low and price formed a high. Price dropped, price came back, and price dropped. Okay, remember, there are a lot of opportunities that are unfolding here. Okay, there are a lot of opportunities that are unfolding here, but we are not discussing that. Okay, we are simply discussing swing trading, which means we are focusing on mega trades in the market. So mega setups or mega opportunities in the market. So although there is a lot that is happening here, I'm not going to talk about it. Okay, so what we're going to be looking for is to have our highest high. Okay, we already have the low of the first quarter, so we're going to be looking forward to have our highest high, okay, of the year. So if you look here, we see price dropping. You see price dropping and coming to this level. Okay, so what you're gonna do for you to know if this is the highest high of the year or not, what you're gonna do, you're gonna take your Fibonacci like this. Let's take our fib. You're gonna take your fib, you pull it from the lowest low of the first quarter, and then you pull it to the highest high, okay, that will be presented by the market. So if you look at this, now you get to see, or you get to wait for price to reach 50%, okay? So the moment we get to see price reaching 50%, that now validates that this is our highest high and this is our lowest low of the year, okay? So when price gets to 50% of this, it now gets to validate, okay? And the time frame that we're gonna be dealing with, it's daily that you need to focus on. It's daily. And weekly, yeah, you can do, but mostly it's daily, okay? So we wait for price to get here, and when price get to this 50%, what we will want to see, we want to see our equilibrium 50% lining up with our previously violated high, okay? Because you know, when price violates a high, when it comes back, it's going to use that high as a point of reference to buy or sell, okay? So in this case, it's going to buy because we have a previous violated high, okay? So this is what we're going to be looking at. And if you look at here, we also have something here. You remember when I was talking about basis and teaching about basis here? So we have a lot that is happening in this place that will cause price to go up, okay? So the first thing first that we are targeting, it's 50%. So we are targeting the 50% level. So price get to this 50% level and we get to see price going up. So this is gonna be our move. So this is gonna be the move that you catch. Okay. So then the second thing now that we're gonna be looking at. So since you know that this is your highest high and this is your highest high, and then price got to your 50%. And then after getting to your 50%, what you're gonna be looking for now, it's any reference point that you can find at this level. Okay. So if you get to look at here, we get to see what price did. Price went low and then went up, created a smaller low, a higher low, and continue to go down. Okay. So if you look at this is what we call mitigation based on the concept that we were talking about. So this is going to be a mitigation. So you're going to pull a line like this. Let me make it straight. Pull a line like this, and then you put it here. And then this is going to be your reference point. So we're going to be looking for price to get to this level, okay? So we're going to look for price to get to this level. And when price get to this level, we're going to be looking for to buy. So this is what we have. And then also, if you get to look at this level, you get to see that we have something here that we can use as a point of reference, okay? Because we have a lot of imbalance here. There is a lot of imbalance. So we can use this previously violated low here as our point of reference to buy. So now you get to see that these are the mega setups or the mega opportunities that you're going to be looking at to unfold in the market. Okay, so you're going to be looking for price to get to this level. Although price right now can react to what is happening here because there is a lot here that is taking place. That's why you get to see price busy playing around at this level here. Okay, because we have an institutional reference point at this level. Okay, but what we are looking at, remember, we are talking about swing trading. So we are looking at price to get to this level and this level. When price get to this level, you're going to be buying. And when price get to this level, you get to buy. Why? Because the market, it's going to come and fill 50% and then move away and then come back. Okay. So this rally here, it's going to be filled 50%. Okay. Price will come back and balance everything. And the moment you see price coming to this level and balance everything at the 50% level, it now rings a bell to you that this might be the highest high of the year and this might be the lowest low of the year. So whatever now that you are doing or whatever that you are looking for, it's simply price to come down here. Okay, it's simply price to go down, to go below this 50%. So if price doesn't come to this 50%, there is a possibility that price will continue to go down until it gets to your 50%. Okay, so if price gets to your 50%, now you know that, okay, price is definitely going down. It's not going to go up that much. So when you see price hitting here, you can buy here, but definitely you need to know that it's not going up that much. It's going to go down. So you can look for any institutional reference point to also sell here and hold when price gets down. Okay, so we get to see what happened here. And if we look at here, we have a supply at this zone here and price get to go down. And then we have a reference point here, which is our mitigation block here that we are looking at. So when price get to this level, we want to see price going up. Okay, and then also here we have this price imbalance that has been created. So we know definitely price is going to use this area as a point of reference to buy. Okay, so Here are the key takeaways. Let me repeat. The first thing you need to have, okay, the first thing you need to do is to divide your chart into quarterly. And then the second thing you need to take note of is the low that is going to be formed at your first month. And then the second thing you're going to be looking at is the highest high that is going to be formed. The moment you see this highest high being formed, you pull your fib, you wait for price to retrace back to your 50%, okay? So when price retrace back to your 50%, you definitely know that this is our highest high and this is our lowest low. So now it sort of give you the range in which you are working, okay? So when price get to this 50%, you get to buy, but you buy keeping in mind that price needs to go below the 50%, okay? You buy keeping in mind that price needs to go below the 50%, because that's what price does. Remember, when price was moving all along here, it created a lot of imbalance, okay? So it will try to come back and fill in 50% and then retrace a little bit before it continues to go low, okay? So that's how you look for swing trading. So I'm going to release another video. This is the first one. I'm going to release another video. If you have questions, just type them on the comment section, then I'll attend to you.